There is nothing more frustrating than having the perfect higher time frame read on the market, the right entry execution, and then seeing this, a stop just before your 2R, 3R, 4R trade runs to exactly where you knew it would go. So how do we stop this happening? Let me show you on CADJPY. And this is a good trade. This is a trade that we want to take. We're just taking it from the wrong place. So to see what's going on, let's actually back out here. So this is 12-hour price action. So we're going to use it to frame our execution in swing trading our higher time frame candles, the weekly, 2-weekly, monthly candles. So the first thing I want to do is look at the monthly time frame. So you see price ran into these previous monthly lows and then shifted bullish. So we're coming off an extremely bullish candle. We've seen a retracement and we've seen price now trade into the previous month's high. And then price action has shifted bearish to stop us out. So it's not a surprise, first and foremost, the price will react from a previous monthly candle range. But why are longs still the right play here? Well, let's look at our higher time frames. So we're looking at the 6-month time frame right now. So we're not taking trades necessarily based on this, but it does give us our higher time frame read. What we see here is that price on the 12-month time frame liquidated and closed the previous 6-monthly candle range. So our higher time frame draw for this entire 6-month period is up. We're looking at this stage for massive continuations in the market. So this is how price moves. It accumulates, manipulates, closing inside, then distributes to the opposing end of the range. So we're looking for longs. That is a certainty. So if we drop down onto the monthly time frame, we see that we have this very bullish candle. So it could be feasible that we've completed our swing pullback and now we're looking for long continuations. And we see that's exactly what plays out. But how do we actually take this on our intermediate time frame? If we drop down to the weekly time frame, you see that price has already completed its accumulation, manipulation, and distribution. So price accumulated, it rode or drove into the previous weekly low and then closed inside. Price then completed the lower time frame weekly accumulation, manipulation, distribution, AMD. So we have at this stage here the 6-month and the monthly telling us that we're looking for longs. We're looking for continuations. But we don't really have anything necessarily here to trade in terms of nested AMD structure. We just have 12-hour price action. So we have the 12-hour order block, which is right here. It's the sell before the buy. I'm just going to delete this for a second and show you. We also have a bullish fair value gap right here. So we have our long context and we have our entry aligning with our long. And we go long. We take the fair value gap, we cover the swing point, and we're looking for a continuation. Let's say a 2R, even though we have much bigger targets on the 6-month time frame. What happens? Price just drops in and stops us out. So let's just take this away, and I'm going to show you the trick. Move up a time frame, or maybe 2 time frames, because this is the daily. So what we see here is the entry on the 12-hour time frame. Now, does this sit in context? Let's bring the weekly candle back. If we are going to look for continuations from this structure, it does make sense. Why does it make sense? Because we have a sell to buy. You see this candle actually closed above the previous candle range. So this is a weekly order block, sell to buy. However, the bullish daily structure is right here. This is the daily order block. Take this away. And this right here is the daily fair value gap here. So this is exactly what happens. Price mitigates first the daily imbalance before taking off. So if we then come back to the 12-hour price chart, this makes now complete sense. That's the entry. And then what happens? We get sell to buy, a close above the 12-hour order block. It's right there, buy to sell. Then it gets wicked into, this could be our new entry. We could either cover the liquidation or maybe the liquidation of the fair value gap, and our 2R plays out absolutely perfectly. It didn't play out here for the single reason being there was higher time frame liquidity sitting below the stop. So price moved bullish, enticed buys, but then created a daily fair value gap. That's what happened in this extension. So price naturally wants to mitigate before taking off. So this is how you avoid getting stopped out. When you're taking your execution entries, always look up first. Is there liquidity building on the higher time frames that could stop you before your trade takes off? That's the key question. So let's look at NZDCAD. And this isn't something that's going to stop you out, but it gives you more precision potentially on your entries. So we see price running. Why is it running first and foremost? Well, this is quite nuanced, but what we see here is that price on the monthly time frame trades into and closes inside the previous candle range. So you see we have accumulation, break below, close inside. We then get fresh manipulation. So price trades into the previous monthly candle range and shifts bearish. However, price has already swept this range. So the higher time frame draw could still remain right here because we have accumulation, manipulation. This is essentially consolidation before distribution. Let's look at our intermediate time frames to actually make sense of this. So at the point here that this candle closes, we are seeing a bullish 2-week candle. But the 2-week candle prints right here, and it prints as accumulation, manipulation. So the draw from a 2-week perspective is still bearish. So we see a sell-off, then we see price eventually trade into this low here. If it's confusing, I'll take away the monthly. Here's the accumulation, here's the manipulation, here's the close. So we now have fresh aligned structure. We have the 2-week nesting manipulation inside of the monthly manipulation that we've already mapped. So target 1, and I've spoke about this on our channel before, is here, and target 2 is here. We're going to distribute aggressively here and then potentially complete the monthly target here. So where's our entry? So if we're looking at the 12-hour time frame, we have a very wide piece of structure really. We have the last sell to buy, and then we have a bullish 12-hour fair value gap right here. So this fair value gap does play out, but it is messy because what happens? Price trades in right here to the fair value gap. So as far as I'm concerned, this 12-hour fair value gap is filled, it's mitigated. So price is now distributing. We're expecting this 12-hour delivery to go straight to our distribution target and then potentially find a new 12-hour order block and react to the high. But it doesn't, it drops into this structure again. So this is not the 12-hour fair value gap holding. It's already mitigated. So what is it? Let's go up a time frame. This is our 12-hour structure. We're just going to delete it. And I'm just going to clean off the chart so we see no higher time frame candles. And what do we see? This is the 2-day time frame now. 2-day order block, sell to buy, and a clean 2-day entry. Imbalance between candle 1 and candle 3. Price mitigates and then reacts. So we go back to our 12-hour time frame. This is actually what is acting as support. It's the 2-day fair value gap. It now has nothing to do with the 12-hour fair value gap. That's already mitigated. That gave us the delivery into this previous high. We then see 12-hour as bearish into this entry. So this entry is not a 12-hour entry, it's a 2-day entry. But if you're already in the trade right here because it's valid, you got in, and you're thinking, should I get out of this trade? Price is now on the 12-hour against me. It's against me because we're delivering into 2-day structure. So price is still bullish. We still have reason to distribute higher. If you're then following on the 12-hour, and that's how you want to execute, what do we get? Sell to buy. New fair value gaps. New price leg on the 12-hour time frame. If you were then to take this order block and target the monthly distribution, you've got a huge 5R plus trade. So trading is not perfect, and don't expect it to be. Every single time frame creates and prints its own liquidity. So you're never going to get this perfect. It's impossible. But you always want to make sure that you're aware of price printing above your execution time frame, because that will give you context as to whether you should hold trades or actually wait and sit out an entry waiting for mitigation of your higher time frame liquidity before you get involved. I've got so much more coming on this that's going to make it a lot easier to actually execute swing trades, but it's important to first understand this foundational principle. So if you like this content and you want to be able to trade effectively that AMD phase of the market, and you want to swing trade everything from the 2-hour time frame up to the 12-hour and daily time frame, then please subscribe to the channel. I've got 30 free videos on exactly this over a 3-part series and a lot more coming. I'll see you on the next one.